Hello ladies and gentlemen, and welcome back to another video where we cover the markets around the world. Well, what a 24 hours it's been, and in fact what a week. Ripping rallies across most markets, gold, stocks, commodities, everything seems to be going up, and for many people the bottom is in. But wait, we have to question that. Of course, we've had Apple and Amazon earnings, they're now out of the way, and the market's about to approach the big level, 20 moving average, mean reversion that we've been talking about now for ages, and our monthly R1 pivot. So are we about to pivot and start moving back down? Well, certainly we've been leaving a lot of gaps behind, but as we know, markets can stay irrational longer than you can remain solvent. So the key here is following the trend. Stay tuned as we take a look at the trends right now in all the market conditions, and of course the macro and much, much more. So much to discuss. See you soon, guys. Well, welcome back everybody to the Daily Show where we talk about markets all around the world. We'll begin here by earnings, and Amazon did all right. 14% increase after hours. Apple about 3% increase after hours, pushing the markets towards a very important zone should we open there. It looked like everything was all good, but realistically what's happening is expectations are just so low in this market that anything looks good. And this is allowing us to do certain things that needed to be done. One of the things was we saw too many selling retail traders. That is, everybody was suddenly on the sell train and the bears were everywhere. We did some polls here on the channel. Always subscribe because we always bring in the polls and the human psychology element into these markets. Super important for your success. And of course, we talked about how everybody's too bearish. The market structure was starting to look bullish, and that's why we've had that rally so far. And we've been very, very bullish here, really since June, maybe even the back end of May on these markets predominantly. Now, that doesn't mean that we won't switch at some point, and we need to know when. So how are we going to do that? It's a mixture of technical analysis and a mixture of looking what everyone else thinks. Here's the new survey report coming in. As of Tuesday, and it will have changed a little bit by now, I'm sure, to more bullish, most people were pulling back on their bearish bets. The bottom is in, they say. 40% now bearish, 32.2% of people think they have no idea what's going on, and 27.7% are hugely bullish. So we're starting to move into the bull territory, and that usually is a cause for concern when everyone thinks something. Some other things that are very important to note in these markets right now, of course, interest rates. Some crazy stuff going on there with interest rates. We've just had a 75 basis points. These are the hikes that we've had this year. Of course, that is going to hurt the American consumer. People are going to pull back on spending, and we still have more to come. I mean, as we know, by the end of 2022, it's expected that we'll be at around 3.25 to 3.4%. Now, the market already knows this. You can see here on this chart, the market's already expecting all of these hikes to come in. And as we've discussed for some time, it then expects a cut in 2023. But before then, we don't even know whether we're going to deal with inflation. Yes, we've probably peaked. Yes, we discussed that late May into June, that we've probably started to peak in inflation. And that's almost probably a sure thing considering what we're seeing in shipping containers and costs around the world. But do remember, there's another thing that we'll be doing a special video on, and that is the supply chain. Of course, China, they've got more COVID cases. What do they tend to do? Shut down. What happened last time, if you remember, the end of March into April? Well, they unfortunately had some breakouts and they shut the economies. So we've got to be very careful of that, and no one's talking about it. It needs to be brought up, and if we get near that case, it could be a big catalyst towards another pullback in these markets. Stocks revisiting old milestones. If we take CPI out of it, so we basically deflate all of these markets by CPI, they kind of have pulled back to actually pretty key zones. Now, this is no new chart. A few people will have seen this by now. And it kind of says, well, if we think about money, we think about the purchasing power and everything else, maybe markets aren't that overpriced. I agree. If you're looking at investment kind of levels, 10% ago on the markets was kind of like almost a decent risk reward kind of parameter, probably upwards of 15% to 20% downside potential. And of course, 30, 40% potential upside over the next couple of years. We've done the stats on it. That's kind of what we get. But there's a really interesting chart. Here's another chart showing you inflation peaks. And of course, when we saw CPI inflation peaks, let's say we've seen it now, what then happens after that? Well, of course, the 1 year forward percentage tends to be overall relatively positive. We can't really take too much history here because we haven't had enough inflation kind of statistics, but these are some of the ones that we've seen in the past, and just an interesting stat. Again, it shows the long-term investor, the person that's willing to hold the position, tends to do well. Another thing that no one's talking about, midterm election years. When do they tend to be volatile? August, September, and October. Where are we right now? At the time of recording, we're in July, back of July. So will we get the normal volatility increase? Remember, these are usually bad months of the year. September is the worst month on record over 100 years for the stock market. Yet no one's discussing why this year usually is volatile. Not just inflation, but also the politics. The midterm election years tend to be a big thing. When we're talking about earnings beat data, 69% beat data, 616 beats versus 277 misses. It's not hard to, of course, beat low expectations, but this helps give an example of why we can go bullish. Why can we go bullish? Well, guess what, guys? We're beating the expectations. Of course, the market's looking great. Yeah, that's a great excuse, but just remember, that's where we're at right now, beating low expectations. Apple, Amazon, of course, they're now done. So we've done the biggest of the tech companies. It's out of the way. So far, so good. But what are the bullish catalysts going to be moving forward? Can you think of any? Put them in the comments down below. Super interested to see what you guys think the bullish catalysts are moving forward past this week. Is it continued large earnings? Is it something else? Let us know in the comments. Let's have a look at the last 24 hours. So we got that kind of pullback that we suspected we would get after the day, which was the FOMC. It came down early, dropped as much as 1%. We saw some nice kind of structure formation. I was hoping a little bit lower for the SPY, but the Nasdaq dropped nicely into a key zone. It then turned around and it was just ramping really for the rest of the day. Strong buying coming in, again, pushing us towards key levels ahead of the earnings. And it was pretty much more of the same, risk on, PBW and TAN. Anything to do with hyper stocks was really the place to be. We did see something a little bit worrying though. Check out this, utilities coming up very heavily. Obviously gold doing well, we know why, but there was a little bit of staples starting to come in. These are the defensive sectors. So this is growth up here. This one and this one are defensive. Why was money flowing into those? Was it because they were behind? Or are we starting to see a small shift by the street? We need to continue to watch this. And one of the reasons why is when we get into this chart here, this is the percentage of stocks above the 50-day moving average. And you'll notice it was really at a massive low. If you ever want to pick lows in markets, this can be a good little indicator for you to have in your charts, and certainly something that I think a lot of people overlook. We've discussed this plenty of times before. Markets come down to an extreme level. Markets must go bullish, and now we're already reaching these kind of high zones. This has been where markets tend to have a little bit of a breather effect. We'll look at that later, but certainly interesting to see where we are. Go over to the VIX. We've been really stipulating the idea that the volatility will drop. Every time we've dropped under this 24, we've tended to go towards 20. That's twice now this year it's happened. And the expectation is still that we could have some ramp here in markets. The markets may go, let's say, crazy with the way that we think about them, and then they could actually turn back. So at this stage, it's follow the trend, follow the price action, be a scalper, be a day trader, be somebody that's nimble and quick. Obviously, investors will be looking at their dollar cost average concepts and those types of things. But at this stage, it looks like the VIX could continue to come down and hit that 20. Remember, that means 20 is a big level. It's like all good. Everything's all good. Bull market's back. It's all good. And then we see the flick or the switch coming into markets. Another thing that people are looking at very positively is something we've discussed here on the channel for a long time now, and that has been the peak of inflation. So the US 10-year yield. Many people don't look at this. Yield is important. We have to look at the 10-year. The 10-year is sick. What's happening is we get massive inversion. That is, the US 2-year, so where they expect yields to be in 2 years, is much higher than the 10-year. So to give you an example, 2.87 as the time of this recording for the 2-year, 2.69 for the 10-year. So we have yield inversion. That is a sickness in the economy. Obviously, it expects some form of recession in the future is what it's telling us. But at this stage, we're seeing rates drop. And a lot of people are saying, well, that means that things like growth stocks are bottoming. And we may have bottomed back in May. Absolutely, we may have. That could have been exactly what happens there. Remember, growth tends to bottom before the entire market itself. So just be watching here. The US 10 years through our key level. It could continue to drop, and that doesn't necessarily mean great things, especially if the 2-year stays high. So compare them, make sure we're on top of it, and we will be here on the channel. Let's move over to the dollar index. It did exactly as we expected. Market rallied up. Market hit the level that we literally put in the previous video. So that was nice. It was great to do this one in the private stream. It just so happened to be hitting the key level. If you're interested, join our free 7-day trial. Come in, watch the video we did live. Why not? You got nothing to lose. 7-day free trial, link in the description down below if you want to check that out. But we talked about this zone, and obviously we talked about the next move. Now we're moving down to putting pressure on this area, this support. If we breach this support, what's going to happen? Money coming out of cash, probably going into things like bonds and stocks and other growth assets. Now, a lot of people will see this and they'll say, is this a Wyckoff? Is this a UT? It could certainly be. And if we breach to a new low, really it could open the floodgates of sellers on USD. So there's some real potential here if it does go to a new low. Of course, at this stage, you've got a lower high here, and that was your high kind of point. So let's see if it can continue to stay lower high. And if it does breach through, certainly could be some fireworks here on the US dollar. If you zoom it out, the next stop could be as low as 10488 or even lower down here at the 103, 104 flat. So certainly a big one. How did that coincide? Well, things like the euro have done quite well. Euro came back. Remember, don't have FOMO, guys. Patience, try to react. When the market comes back to key levels, have a clean idea or zone. You'll notice we're back to the volume profile midpoint. We really want to see the dollar index fall and the euro make a new high. It's been kind of consistently making lower highs now for a while. So for this to make a new high will be also significant and could really begin some strong movement in the euro and some massive weakness, obviously, in the US dollar. It hasn't happened yet, but yeah, the entry down here was certainly something pretty nice. And again, you can go check that out if you want to. Let's move over to gold. Talk about this level and this zone. So we've been bullish here on gold, really down since these lows. Things are looking better by the day here for gold to have probably put a low in place. And we know that when this type of stuff happens, it's significant. We've hit a trend line back from 2018. That's this line here. And we've basically come exactly off this level. So this is why it pays to use multi-time frame analysis. We're on a weekly here, a pretty high time frame for a lot of people, but that's how we do it. We do multi-time frame analysis. Let's bring this down. Think about what's just happened. We just broke this level here. Very significant for gold. It's kind of saying that now pullback should be met by buy demand. So we've already bought very nicely off here. We had a massive ramp after the FOMC. It's probably due for some pullback, but who knows with that dollar index, we'll have to find out. If you're in bullish long on gold, well, you might have taken some profit off here. I wouldn't have blamed you at all. It was our first target. But you might even have bigger plans. Maybe you've got plans to get all the way back up here, this 1806 kind of level. Certainly a key level. You'll notice we've got it highlighted with this box. And it's kind of like a longer term goal for me over the next month to 2 months. We're entering into a very good seasonal period for gold. And as I promised, we will talk about money flow on the weekend video. So subscribe for that if we see it. Not too much probably happening here in the next 24 hours for gold, but certainly pullbacks hopefully should be met by buy demand according to what we see on the technical charts. Oil, now this is where things get a little bit more clouded. I think oil is tough, and it's because we're seeing rates going down. Oil doesn't like that. Oil likes high rates. When interest rates are going up, and that means the market expectations for interest rates, not the reality, oil tends to do big numbers. At the moment, that hasn't been happening. We've got a tweezer here on the oil futures for US oil. We need to break 98.28. If you're looking at the session, that's kind of like that kind of go sign. Okay, cool. It looks like we are rallying, and hopefully oil will then bounce, moving towards that 104 level. So day traders are going to be watching zones like this, bringing their own systems in. Obviously, you guys need to practice your own risk management and stuff, but these are some key levels, and you'll notice for now, we've kind of broken through the downward trend. It seems significant. We've got a nice base. We've got that potential of a max pain here. We've got the spring. It just needs to do this. And that's kind of one of those last pieces of the puzzle. Hopefully after that point, we can go bullish. I'm not super fan of oil. I've talked about my bearish sentiment longer term on this, but you know, it is what it is. It's what's there. You trade what you see. You don't really trade your opinion so much. Tesla, nice move, new high. Obviously leaving behind, as the story is with all these stock markets at the moment, gaps everywhere. We've got gaps here and all sorts of inefficiencies kind of being left in these markets. Tesla will run with the stock market. There is a gap that's been not filled fully, which sits above here for Tesla. So maybe that happens early in the session on Friday, and possibly we even see some sell-off from that point. But people have now got all sorts of crazy expectations on Tesla. I've seen a lot of people drawing this line, which goes through those previous peaks, and they're like, can we make it back up here? It's possible, but the only way you can do something like that is you need this market to start to go fully irrational. We want to go a 41.50 into a 42, crack the 42, and break on the SPY, the 4,300, get into that zone. So for now, yes, really Tesla is more of a trade where you follow the indices, and if you like Tesla, that could be the one you pick. Amazon, really decent base on this. Obviously, we had that playing out. And as of the time of this recording, it's probably going to open around 138, 139. Big earnings, fills the inefficiency gap that was left over here on the left-hand side. And as we can see, potential support becomes resistance as well. So we're hitting a bit of a critical level there, similar to Tesla when it opens. Quite a lot of kind of zones where you could start to expect potentially like a little pullback, maybe not the end of this trend, but a little pullback into hopefully a little bit more bullishness. XLY, XLP, one of our predominant kind of leaders to show us whether growth is outperforming or not. It's not really doing anything. That is, consumer discretionary isn't really beating staples at the moment. That's worrying about this recovery. Usually with recoveries, you see the growth smashing the staple. Why is it not doing so? Is this a bit of a sign that tells us that Wall Street is still defensive, even though it looks like everyone's a bull on the market? Well, certainly is potential. Let's move over to the the DAX here, the DAX 40. This is the European market. All of these wicks, all of these shorters getting crushed. New high. Do we fill the gap? 13,800. That's been the zone that we've been talking about here for European traders. It looks pretty bullish, maybe small pullback. Ideally at this point, we make a new high and day traders can come in and hopefully look towards filling that gap. So that's something that's looking a little bit more positive here on the DAX. IWM, we'll go over to the daily chart here so you guys can see it. Here it is. Nice breakout a few weeks ago or a week and a bit ago, and so far so good. Strong movement, obviously 190 still the target here for IWM, and that will put us back to the resistance. So something that people will be looking at, and at this stage it seems like it's still by the dips and by the levels as it pulls back on the smaller time frames. Nasdaq hit the first level, hasn't hit the second level, but hit the first level. Look at this, bang, straight into it. It actually came off our box zone that we set in the previous video. And down here we had, you know, an okay entry. I mean, we could go back to the 3-minute chart or something smaller. You'll notice it initially goes bullish in the morning. We get the bad GDP number. Bad GDP number, doesn't really do stuff. Then it comes down, makes a little change of trend just around those kind of orders that are probably sitting here. And we see rally, rally, rally. Look, you would have had to be pretty nimble to get it. It happened in the first hour and a bit of trade, which is exactly what you wanted. And I would have preferred the market to come down further before rallying up, but you know, it is what it is. This is a very aggressive take, and for anyone that got it, congratulations. We're now kind of sitting around that take profit zone. So this is a first take profit for so many people. And the main reason is going to be this, the 20 moving average. We know the 20 moving average is no joke. We've hit it. We've hit it in style. Nice rallies. We've left gaps everywhere on the stock markets. The Nasdaq and the Sp500, they haven't filled the whole way up. We've got 1, 2, 3, and 4 major gaps left. Look at them on the 2-hour. They're all there. This is unusual. Unusual to come out like this, to leave so many gaps. You just have to believe that at some point they're going to come back down and fill later on this year. this is too many gaps, guys, too many gaps. So be careful out there, yeah? Here's the one that we left previously. This was what we thought we might have been able to get before we coiled and broke the defended zone back in June early. And at this stage, could we rally past and get to a 4,300? That's an interesting idea. Let's have a look at one of the big trend lines that a lot of people are starting to bring in, and I don't blame them. Check out this. It's similar to the one we'll do on the Nasdaq in just a moment. So basically you have the previous peak, the previous massive rally, and could we have a monster rally that leads into here? Well, I think that if you're playing the bearish game, which is fair, if you're going to predict something that happens, remember, markets can stay irrational longer than you can remain solvent. So you've got to be very careful at picking your instrument. I'm not here to tell you anything in particular, but let's just say if you had a plan and you thought, okay, in 3 months' time, the market's going to be lower, really the only way to make that kind of prediction is going to be some form of option style trade. It just is what it is. If you short and you're wrong, you can get absolutely blown out of the water. I teach this in my mentoring classes. It's all about not just being right, but also instrument selection. Think about you trade natural gas. If you trade natural gas with CFDs or leveraged contracts, you could get slaughtered. They call it the widowmaker for a reason. But if you trade natural gas or oil or something with options instead, trading more the stock component, then maybe you can get it more right. That's the kind of thing you have to think about. So here we are at the market. We're basically going to hit a 4,100. We're hitting the monthly R1. It would make sense to have a pullback, maybe come back, retest these points here, and then find some buyers coming back in. It does look like at this stage, it's still on the small time frames and buy these kind of dips with the correct procedures and all of those types of things. There's no sign yet that this market is weakening, but we will have a special weekend edition where we'll talk about all of these negatives and possibly the positives that you guys are putting in the comments down below, along with some of mine moving forward. I would like to see it actually do this. At the moment, the way we think about the market is really pretty similar. I mean, Elliott wave, people will be kind of happy with themselves. They'll be like, you know, it's A, B, C, Tom. So here's your A, here's your B, here's your C move. Now, we saw this happen back in March of 2022. We had our A, we had our B, and we had our C. And the C was a rip rally to remember. That was like 11 days straight on Apple or whatever it was. Some in absolutely new statistic we hadn't seen in many, many years, if not decades. And are we going to go back into that? Well, of course, we have this downward trend. Let's have a look at the Nasdaq. So this is another one that you can bring on with the downward trend as well. So we had the initial one, so far so good on that. And then as we go through, we have this one as well. So this is going through those previous highs. Do we rip into these zones? This would take us back to basically around 13,200. It will take us past this high. People will then think, okay, absolutely, the trend is up. Everyone will be convinced. A lot of people will be bullish. And is that where we set the trap? Well, somewhere in here, you've got to start to say, well, is the upside worth it? The upside potentially 4.81. The downside could be new lows. You don't know this. Could be new lows, could be lows into filling the gaps, 10%. You're starting now to think, okay, I've got to be nimble and fast. And if you've set your dollar cost averaging, your long term, why do you care? I mean, you just don't. You're just like, you know what? I've set down here. I'm happy. I'm going to hold, whatever your strategy might be. So markets coming up, we've got to be careful. This will be the time that we have to dial into these smaller time frames. Let's have a look at the actual futures here. Again, previous little bit of support hitting resistance. Beautiful action here on the Sp500, just a massive ramp. I did hope it would come down a little bit more in the previous session. We got the turn here. Few people in the private and public community of Discord got this one, and we're ripping it from this point. Congrats to them. Certainly a great level to be doing things. And we've hit that 20 moving average. At least we're probably going to hit it in the next session. So be careful here on Friday. Maybe some profit taking. If we think about where we were at the start of the week and where we are now, we really have done an amazing effort in terms of huge bullish action through the week. If you got kind of those lows, you're up about 4.77%, which is not a bad week in the SPY and more on the Nasdaq. Let's take a look at options expiration for the Friday. We have 420s and 410 call options expiring, maximum pain of 395. That will change during the day, but let's say it's somewhere around that 400 plus. And really what this has been a story of is everyone that's got all these puts in getting slaughtered. Unfortunately, they're losing all their money, guys. All these people with the puts, they're losing their money. And that's not something that you want to be doing. So remember, it's more about following the price action and then also having that foresight to say, well, maybe something's coming soon, and doing it, unfortunately, before everybody else does it. That's what you've got to do. When everyone thinks something, it's never been the best. Bitcoin, onto that, obviously the rainbow chart still showing us in what they call basically a fire sale. Yeah, Bitcoin's okay, but it's not really doing too much for us. It's rallied here nicely. It's moving up. I wouldn't be surprised at all during this rally for us to hit a 25 or even a 27, 28 for Bitcoin. It's at that peak again. It's looking all right, series of higher lows, and a decent structural kind of movement. Not too keen on trading this one at the moment for obvious reasons, but if you do like it, I mean, probably Ethereum is the better choice. It's just been more rallies, more money. It seems like there's more interest and better technicals on this one. So that's got a breakout on it at this stage, kind of predicting that there might be a little bit more here. Maybe we move a little bit higher towards the 18 or even 1900 zones for Ethereum. If you haven't already, come and follow us at FX Evolution. At FX Evolution on Twitter. We're posting a whole bunch of stuff there. And do remember, one of the Fed's key levels here coming out, we're going to see the PCE price index core. Now, the Fed uses this to figure out what they're going to do next, and inflation and all these types of things. It's one of the ones they look at. So it will be important. It comes out at 8:30 a.m. New York time. If we're looking at it on the surface, as we mentioned about a month ago, we probably hit peak inflation already. But that doesn't mean the problems have gone. Midterm elections, supply chain issues, potentially due to COVID in China, and also just how long is it persistent for? Do we go into stagflation economy? All these things will eventually potentially spook this market. So stay tuned, and of course subscribe, smash the like button, and we'll see you in the next video. Have a great day, guys. Bye for now.